Hello guys, you are welcome to my video, and in this video I'll be covering the recap for last week in regards to our weekly outlook video. So last week was actually an amazing week filled with lots of opportunities and a lot of traps for a lot of our time frame traders and all of that too. So but the week was actually amazing. We caught lots of opportunities and moves, and we had a great one. So currently my course is actually live. You could get more information about that in the link in the description, and all plans for my VIP channel are actually currently running on 20% discount, so you can actually check out info about that too. So without any further delay, let's jump right into this. So with the weekly outlook, as you can see on the screen, I expected price to actually fall back down into the discount level before pushing up higher, but then with the market open, we saw a gap. This was Monday. I'm just going to make this very fast. We'll just run through them and move on. With the market open, we saw a very huge gap that actually gave us a candle that was signaling a very bullish move from everything. So in regards to that, any kind of buy that will be taken from this level, will actually keep it in mind that price is yet to fall back down to this level. So the first buy actually came out after the whole market open. Price bought during the shan session, then sold back down towards the gap level, but failed to close below that level. So after that happened, price actually gave off confirmation off on that particular gap, and after that happened, we saw the failure of price to close below this low, coming back to that level. Instead of to use it as a way to push down lower, give confirmation here. But then when we are taking this particular trade, we tend to notice that there is a bearish level sitting at this point. So anything you're taking from this level now, you will be very cautious. But price kept on invalidating all the sells and kept on failing to break the lows and kept on creating more highs. That was actually what protected each and every one of these trades, despite the fact that if you are holding this kind of trade, so the time that price actually takes out this high, you would actually know that you actually see. Now you could see we got the first entry during London, we got another entry in London, and we got about 3 entries during the London session. But then down towards New York now, after price took out the initial high, we saw a massive sell-off that actually took out this low. Was actually a valid low due to the fact that it took out this high here. And if you should take our discount to our Fibonacci tool, if we mark out our discount level, you could see that price came back into a discount level, even bought up as I has taken out this high. Before next thing we saw a harsh fallback that actually gave a break of structure. So after this break of structure, now what we could do is we could take our Fib tool again to look for the premium level, and we could see that our premium level is sitting within all of this region. But if we define a bit lower now, and also take note of this because this actually later had a turnout at the end of the week. So if we should refine lower now, to, let's say, 5 minutes to this point where we had the bigger structure here. Should we find lower, we ship our discount, our Fibonacci to there, we mark out our premium level. You could see that this is where our premium level is on when we refine. So let's just mark that out. After we mark that out now, the first trade now, since price actually taps into this major premium level on the hard time frame now, you could easily look for yourself from this guy here that price used to break structure, to break all of this low and actually take liquidity to reduce the entry at this level, right at the discount level in regards to this failure swing here, and leave our stops right above this high. And with this particular trade, I would actually be targeting this point here. That's the entry for our buys at the discount level here. So if you can see what happened, price actually held up to that level, sold down beautifully down to Tuesday. But then towards late London session on Tuesday, you tend to notice that we had this particular level here. Let's zoom in a bit. We had this particular level here that if we use our Fibonacci tool here and take from this high to this point that price actually gave us the break of structure, price was yet to tap into the premium level here. and it left this particular high at this point. So after it left this particular high at this point, now we could easily mark our premium level here, because this guy that went so close to tapping into the premium level is actually inducement. It's actually engineered liquidity. So most likely what will happen is that price will come back to that level, take out that particular the guy that failed to tap into the premium level and sell off with it. And that's exactly what we saw during the New York session. And price sold beautiful. It sold beautifully. Like we see a very beautiful 9-hour trade and giving us TP on this particular trade that was over 13 hours too. So after that happened, now already we from the weekly outlook we had the buy level already. I spoke about the buy level already from the weekly outlook. So the trade that I would actually bet on now is when price sells back down to that our buy level after taking out the whole liquidity that was the whole liquidity window that was there. I would actually take this buy from this level. I could see price actually tapped into it beautifully. And if I'm taking this buy now, I'll actually easily target that to take out this high because of how strong the level was from the high time frame. And I could see how instantly when price held this particular entry, price gave very strong instant about 600 pips that ran down during the Asian session. So coming on Wednesday now, if we should go up to, let's go to 1 hour. I dropped an outlook on my channels, all the channels. I actually dropped an outlook on all the channels. So in the outlook, I was looking for my buys from this point here, because if we should come back, let's go down to 15 minutes. When we come back down to 15 minutes here, we tend to notice that already price had on lower time frame, price had already respected the whole discount level from the time that it tapped into this guy. But then if we should come to like somewhere like 15 minutes, it was yet to actually tap. Can you say it was yet to actually tap into the discount level from the 15 minutes time frame? But then with this push that actually happened there, already price, if we take our two, already price was actually giving out the whole inducement and everything from this particular point here. And because of that candle on the 1 hour time frame, if you take our the Fibonacci to mark out to this break of structure level here, you tend to see that when price made this move, it left out inducements at this level too. So our entry now on that 1 hour time frame would actually be very valid because of that. And if you mark it out here, you see how price came back into it, tap it, and gave a very beautiful run. But after it gave the run, it was actually signaling as though price was breaking out of the bearish trend line that we're in. But you tend to notice what happened after. In fact, if you took this trade, it was actually a 6.9 hour trade, nearly 7 hour trade, about 650 pips. If you take 50%, you should take 50% of this for partials. You'd see that you already had enough to take partials before this actually happened, the failure of price to hold the breakout. So when price failed to hold that breakout now, if you tend to if we can see what happened here with the time that price actually took out this high, if we take our fifth tool again, we mark from this low to this breakout structure here, you could see that this particular low already had tapped into the discount level to push up higher, but then price failed to hold it as a way to push up higher and give another breakout structure below this low. After this breakout structure, already you could actually see I've covered this particular model too, if you just swing model and all of that. You could easily see that if you should take from this high back down to this point of breakout structure, price was yet to come back into the premium level. You could easily just look for your trade within this premium level here, and if you refine lower, you could tend to see that this was the key entry at this level, and you could see price actually came back, tapped into it, and sold down lower. But when we saw this failure in this bullish trade and we're switching to a sell trade, now where would we target? We would easily target, because remember what I said here, if we take our fifth toe from this low to this breakout structure here, this was liquidity again, this was inducement, because price failed to actually pick up buy orders at the right at the discount level here. So this is also liquidity here, this is also liquidity, and price will actually go for it. And you could see the sell actually hit TP at this point, and we had this buy level that was yet to be. This is another type of entry here. I won't cover it here already. I've covered it multiple times. It was actually very valid, but price actually weights down lower below the low, so it will reclaim that level, especially now that we even have inducement, and use it as a proper way to buy. And you could see I marked this out. I think I called this trade on my VIP channel too, and price actually bought up beautifully. If you are targeting this level with this trade already, you smash TP with it. And you could see that was actually what brought about the actual breakout from the bearish trend line, because after price tapped into it, we saw a break of structure. I called this particular trade on my community channel and on Twitter and on my VIP, so I called it on all of my social media that day. You could see the concept behind it is very simple. Already confirmation towards this trade here, break of structure, mark at a premium discount level. You could define lower if you want, and you could see boom, price came back into it. Price came back into it, held it up and started to buy beautifully. I think there's even much more confirmation here on lower time frame, but we won't be looking at that. There's more confirmation on lower time frame here, and the same thing happened again after price tapped into it, holding it, giving us another break of structure. The break of structure that actually price still respected. That's additional confirmation. Can you see? Tapped into the discount level again, started to buy, giving us another break of structure. Price still following and leading with the build up, give us another break of structure again. If you mark out our discount level here, it was here, and if you refine lower, you could get this entry, and price bought up beautifully down Friday. But then remember this point that I've made here about the defined premium level here, that price was yet to tap, but price held up and kept on selling up from this level. You could see what happened after price bought up as high as this. Price was so close to tapping TP, but instead of price to do that, price went into that premium level, and next thing we saw was a lot of selling pressure that actually came back, took out this low, that took out this high here. So what I'm actually expecting now with the new week is actually already the weekly outlook video is live, and I advise you actually check it out so you can actually get the full explanation of why I'll be taking the decisions I'll be taking with the new week. You could see this break of structure that took out this low. If I should take the discount to the Fibonacci to the markers from this high to the point where we broke structure here, you could see that our premium level lies all within this range. So we could actually need to refine more to get it, and you could see what happened here. Price actually sold off, gave another break of structure from this low here. So price could actually sell off from this level. I expect to see probably some kind of reaction, but I expect some buying pressure that will push up price into this level. And if there's confirmation, we could use this guy now, this particular level here, as a way to sell off as low as this. But if there's no confirmation and price continues holding, most likely price will just use this guy now, this high here, as inducement. This is inducement. So it will use it as inducement, fall back down into the premium level before we probably see confirmation to sell lower. And if this level fails to hold and the bullish pressure is still strong, price will push up higher and continue pushing up higher. So basically, this is what I'm expecting with Monday's open down towards Tuesday. We tend to see price forming structure that would actually give us more clarity on which of this level price would actually hold off with selling, or if price will actually keep on buying. So stay active so you could actually get that intel, and I love you all, and we'll see you in the next one. So thank you for watching.